Today, we're diving into two popular ETFs, JEPQ and QQQI. If you're looking to make informed investment decisions, stick around because we're about to break down the pros, cons, historical performance, expense ratios, and the risks of these two funds. Let's get started. Make sure you stay to the end, and I'll also give you a look at my personal portfolio and how I've chosen to invest when it comes to these two funds. Quick hint, I am a fan of the NASDAQ 100. Alright, let's kick things off with a quick overview. JEPQ stands for JP Morgan NASDAQ Equity Premium Income ETF, and QQQI is the Global X NASDAQ 100 Covered Call ETF. Both of these ETFs use a covered call strategy to boost income and index the NASDAQ 100. They have unique profiles, but which one is the right one for you? Let's find out. First, let's look at the pros and cons of each ETF. So JEPQ, this focuses on generating income by selling call options. This means steady income and lower volatility. Plus, it offers diversified exposure across various sectors. But there are some drawbacks. The covered call strategy caps potential upside gains and can be complex for beginners. Now, QQQI is all about high dividend yield and better tax efficiency. This gives you higher yields and tech exposure, much like JEPQ, which is great for tech enthusiasts. However, it comes with higher sector risk and, like JEPQ, limited upside due to the covered call strategy. Okay, let's move on to the historical performance. This gives us insight into how these ETFs have performed over time. So JEPQ has shown steady performance, especially during market downturns, thanks to its conservative strategy. Its returns are moderate with lower volatility, making it a stable choice for income-focused investors. Year to date, JEPQ is up 10.12%, as of the date of this recording. On the flip side, QQQI has generally outperformed JEPQ in total return, driven by high growth tech stocks. But remember, higher returns come with higher volatility, so it's a bit of a roller coaster ride. QQQI's year-to-date growth is only 3.74% as of this recording, but keep in mind that this ETF is only less than a year old. It started in January of 2024. But the growth is really in the dividends, and we'll get into that later. So now let's look at the expense ratios. These are the fees you pay annually for holding the ETF. JEPQ's expense ratio is around 0.35%, making it cost effective for those looking for steady income without super high costs. QQQI's expense ratio is a bit higher. It's at 0.6%. While it's pricier, the potential for higher yields might justify the cost for some people. Okay, now let's get into those dividends. As of the date of this recording, here's the dividend history for JEPQ and QQQI. JEPQ has an impressive dividend yield of 8.95% and has paid $4.92 per share in the past year. Dividends are paid monthly, with the last ex-dividend date being around the first of the month. This makes JEPQ an attractive option for monthly income-focused investors. QQQI has a dividend yield of 14.48%, much higher, and paid $3.02 per share in the past year. Similar to JEPQ, QQQI has also paid dividends monthly, with the last ex-dividend dates being around the end of the month. While the yield is higher than JEPQ, it's still a bit early with this ETF only being less than a year old. Now lastly, let's dive into the risks associated with each of these ETFs. JEPQ faces general market risks and income risks from its call option strategy. However, its diversified exposure and lower volatility make it less susceptible to extreme price swings. QQQI, on the other hand, has increased volatility. While it offers potential for high returns, it's also more vulnerable to significant losses during market downturns. I wanted to do this too. It's compare JEPQ and QQQI to the actual NASDAQ index, which is the Invesco QQQ. So now let's compare the overall growth of JEPQ and QQQI against that QQQ and NASDAQ index. That is one of the most popular ETFs out there. So Invesco's QQQ tracks the NASDAQ 100, just like the other two income ETFs, but without the covered call strategy. This means QQQ focuses purely on growth. And historically, QQQ has delivered impressive returns, especially during tech booms, thanks to its exposure to top tech giants. When comparing growth, QQQ has generally outperformed both JEPQ and QQQI due to its aggressive growth strategy and lack of income capping covered calls. However, this comes with higher volatility. JEPQ offers more stable returns with lower volatility and steady income, while QQQI sits right in between, providing higher income with tech growth, but at the cost of increased risk. So, to sum it all up, JEPQ is a lower risk option with stable income and reduced volatility, perfect for conservative investors seeking diversification. QQQI, with its higher risk and potential for substantial gains, suits those with a higher risk tolerance and a focus on tech growth. QQQ is for those who want to go all in on tech growth and are comfortable with the higher volatility. and very minuscule dividends. And as promised, for my portfolio, I have 4.73% of my holdings in QQQ, 4.9% of my holdings in QQQI, and 10.89% of my holdings in JEPQ. I've slowly been continuing to add to all of these positions while shifting more from other income ETFs and I'm investing that into QQQI. And this is not financial advice. I'm just a fan of the NASDAQ tech sector and choose to have a strong balance of growth and income. If you'd like to see more of my portfolio or have thoughts on JEPQ, QQQI, or QQQ, please comment down below. I'd be happy to share my full portfolio if you all are interested in a future video. So let me know. Remember, the right choice depends on your investment goals, risk tolerance, and whether you're looking for steady income or high growth. Thanks for tuning in. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. See you next time.